Welcome to the Naavik Gaming Podcast, where it is our mission to explore the business and future of video games. We bring together the industry's brightest builders, investors, and thinkers to keep a pulse on current events, dissect emerging trends in games, share lessons learned, and have a great time. This podcast is also part of Naavik's growing ecosystem, which ranges from free and premium research to consulting and advisory services. For more information, visit www.naavik.co. Now, let's jump into the episode.
Hi friends, welcome to another Roundtable episode. We're joined by Aaron Bush, co-founder of Naavik, Mihai Vicol, game strategist at Doppelganger, and Jonathan Anastas, CEO of Clash TV. Hi everyone.
Hello.
Hello.
Good to be here.
Yeah, Mihai, thanks for joining us for your first episode. It's good to have you here. So, do you mind kicking us off with a quick self-intro?
Of course, thank you. Yeah, it's a very, very catchy name, I guess. So I'm Mihai. I'm for the last few years I was a market analyst at Newzoo, which is basically one of the leading market research firms in the gaming industry. And now, more recently, I've joined Doppelganger as a game strategist, where we work with brands and we help them basically ideate, create, and develop their gaming strategies or gaming-related strategies.
Cool. You'll have interesting thoughts to share. I'm looking forward to hearing them. And Jonathan, I say Clash TV, you have a new role. Congrats.
Yes. Thank you so much. Yeah, I joined this month Clash TV. We're a streaming platform focused on helping emerging and niche sports find their audience in a changing media landscape. So thrilled to be here. We will have a Web3 gaming strategy and an esports strategy to be announced in the near future. So I stay very close to this category here that I love.
Ooh, I also another game I like, Clash TV. It makes it sound like a wrestling channel or something. It's just bodies clashing. And last but not least, Aaron brought us his donut hat.
Yep. Makes a regular appearance. Happy to be here. And congrats, Jonathan, on the new role, too. That's exciting stuff.
Aaron, you didn't say your usually happy hello. Are you dropping them?
Oh, I don't know. My intros are always really awkward. Sometimes recently I've gotten them from ChatGPT and they haven't really worked. But I should probably bring that back. That would be fun.
Yeah, I was listening to last week's episode and I was waiting for it, and then it didn't come.
That's okay. Slow. I can bring it back.
Cool. All right. What are we talking about this week? EA's layoffs, E3 saying goodbye, and catching us by surprise, or not surprise. We'll discuss that. The mobile gaming market is meant to be stabilizing, and we'll dive into what that means and if we believe that is accurate, and also looking at the games that Sky Mavis announced for its Ronin blockchain. And first up, we have Mihai. So what's going on with esports?
So as many of our listeners probably already know, esports is in a pretty bad shape and has been in a pretty bad shape as of late. But this week started with a few shock announcements to many esports fans. So basically there were two announcements, 1 or 2 days apart. And essentially both TSM, one of the most decorated teams in the history of League of Legends, also active in other sports, and just a very popular esports org with a lot of fans, has announced that it will pause its esports efforts in several titles and is likely to be selling their League of Legends spot in the LCS in North America. And 1 day after this announcement, CLG, another very seasoned esports org based in NA, announced that it's closing its doors as an esports org. And obviously mass layoffs are to follow suit. So we know esports has been in a slump as of late. TSM was rumored to be in a pretty bad shape after the FTX's fallout. But I don't think many people expected two of the largest esports orgs in NA to actually disband, to essentially stop their operations. And I'm wondering if we see these two huge orgs with a lot of fans and a lot of traction among sponsors and other third parties close their doors, what will happen to other less seasoned esports teams and organizations? And the second thing I'm wondering, and that would be nice to discuss, is a vicious cycle likely to follow? We know esports teams have been traditionally highly reliant on sponsorship revenue as a main revenue driver. So, if some of these big teams close their doors, then will this mean that less fans are engaging with esports as a whole, which will drive in turn less viewership and less fan engagement, which in turn means that it becomes less attractive for brands and for brands both endemic and non-endemic to sponsor esports, which will kind of further accentuate this slump. What do you think?
So I have a crazy view here, which is, it seems to me in these cutbacks, esports teams shouldn't be cutting back on the thing that they are by definition, which is esports teams, right? So if you're going to stop doing something, maybe stop making crazy expensive merch, maybe like pull back on your like creator side. Like the core business seems to be the thing that they should be doubling down on, right? In times of financial difficulty. And to your point, the greatest risk is to break the flywheel, and the flywheel is based on being competitive esports teams. Could you imagine if a professional sporting team said, we're in financial trouble, so we're going to stop doing professional sports? Like,
Yeah. I think especially with TSM dropping League or selling that spot, that's where I was like, are they shooting themselves in the foot by that specific move? Like their biggest esport above all, where they probably have the most fans and have, probably a decent chunk of their revenue coming through. And I don't know what the logic is, but it definitely is rough. And I guess like it's just that the economics don't really work anymore, even for some of these like larger sports. So they just have to make tough decisions where just like the cost of operating in these leagues and paying players, which I know, we've seen salary rises grow pretty quick over time. That maybe it's hard to unwind from that. That's made a dent. While revenue from lower engagement, post COVID, et cetera, has also been hit harder. But to me, it seems like, apart from like esports prize pool winnings, that the formula for an esports business is the number of fans you have times the average revenue per fan, if that revenue is profitable. And so we've seen all of these teams go a little crazy on both sides of that equation, where like to earn fans, they're going hard in just creator verticals, partnering with streamers and YouTubers and things like that maybe didn't work as well as planned in terms of converting those viewers into, League of Legends, fans or something like that. So then on the other side of the spectrum, just throwing things against the wall in order to earn revenue, such as merch or, random partnership deals or what have you. And to me, it just feels like that equation needs to like be reset and get refocused on what matters most, which, hopefully that would be esports in this case, as you're saying, Jonathan. But I guess it's kind of hard to know without looking at the numbers on what really is driving, the profitable revenue in those cases. But it is dangerous to abandon what you're known for.
I think like crypto disrupted the ecosystem, right? And all of a sudden these big checks started landing outside of the core business. For traditional sports, that was a smaller percentage of revenue, so it didn't matter so much. And now with that money gone, but I kind of blame FaZe Clan for kind of this misdirection, right? Which is like somewhere along the line, this category thought they were selling cool instead of esports. And it's called esports, to your point, Aaron, right? Like if you're not participating there, you can't just export cool. So yeah, I think we sound somewhat aligned in the surprise and shock here.
Well, but didn't that happen? And I think we've discussed this in a past episode. For example, the franchise model, where the teams have to pay so much to even participate in the esports side, they can't make their money back. And then if they get, if there's no TV licensing or streaming platform licensing deals for them to get some revenue stream from that, if the prize pools are dwindling in size, like, is it actually profitable with all of these costs to keep your doors open and not pivot to try to find other revenue streams that are not esports?
I think that's pretty much the case. Like Jonathan, you're saying that, they should be focusing more on their core business. But I think the main reason they don't focus more on their core business is that it's just not making them enough money to stay afloat. This is exactly why we've seen them try anything and everything, including, partnerships with pretty much anyone who's willing to throw money their way, including blockchain and Web3 companies. But yeah, I think some orgs like 100 Thieves, they were making the revenue. They were making like a third of the revenue from merch, a third from their esports activity, and a third from other activities. And I think this was, in their case, this split was on the good side, because most teams are making even less than that on the esports vertical alone.
Yeah, that makes a lot of sense. The other thing, the last thing maybe that comes to mind is just a lot of these teams raise so much money on so much hype, and it's hard to backtrack from that to unwind all of the investment that you put in to a bunch of areas, but also, at a time to stay competitive. That sort of seemed like it was the norm that, teams were chasing. But yeah, really thorny on all sides. I think esports as a business probably just wasn't ever what it was hyped up to be. But the unwinding phase, which I think we're in the middle of, it's been going on for a while. It's just tough, very tough.
And I don't have an answer for your question, Mihai, about the vicious cycle. Jonathan, do you have any views on whether, by seeing these big teams leave, for example, the League of Legends tournaments, do you think that will dwindle the numbers of the fans and so on with that cycle?
Perhaps an even relatively more straightforward question. Do you think we'll see more esports teams follow in the footsteps of CLG and TSM?
It's a very interesting question, right? To your point, if there are fewer competitive teams, does that unwind the whole flywheel? The question that I don't think we've answered yet, because this category is so new, is, are eyeballs driven by the underlying IP, right? Are you tuning in to watch League? Are you tuning in to watch COD? And almost who's playing, as long as they are competent, is irrelevant. Or does it look more like traditional sports, where who ends up in the finals has a huge bearing on ratings, right? In traditional sports, there's nothing they want more than like New York versus LA or Chicago versus LA. And, it can have double-digit changes on ratings. And in esports, that hasn't been the case, right? It's like the IP is what's driving the eyeballs. And I think we're about to find that out, right? If more esports organizations start unwinding, we're going to learn the answer to that question.
I think leagues need to reset, because the teams are sort of operating at the whims of the games and the companies that own the games and, run the show that they must play inside of. And so, someone like Activision, we've talked about before, they've, been leaned very on the greedy side and have viewed esports more as a revenue driver, more so than like a engagement driver. It's both, but, by treating it as a revenue driver, it increases cost for all the participants. And so, honestly, I think if games want prosperous esports, they need to be more generous in how they set up their ecosystem to succeed. I don't know if we'll see that happen. And that's probably more specific to the top games, more so than the long tail of games. But yeah, probably a major reset is needed. I think the vicious cycle will probably continue unless the publishers step in with a bit more generosity, for better or worse.
Agreed. Well, we'll keep an eye on how things develop, and then approach it again on the episode when we have more news on that front. So, unfortunately, continuing on the layoff train, Jonathan, what's going on with EA?
Yeah, speaking of top publishers, so EA announced that they're laying off 6% of their employees across a number of departments, and taking, I think, up to a $200 million write-off related to that. My first couple of thoughts are, in terms of framing how they did it, they're going to focus on larger scale, higher engagement, bigger community IP. And my first question is, wasn't that what they're supposed to be doing all along, right? Hasn't that become the model of big publishers, right? If you look at the top 10 gaming charts for years and years and years, at any given time, 80% of it is sequel or franchise or top IP. EA's got 4 games on the top 10 charts now. One of them is new IP, right? So it makes sense, but it also sort of feels like you're just confirming that you are doing what you probably always should have been doing, A, right? And then B, it seems like Wall Street has given them a bit of a reward for the financial prudence. We've seen this happen with FANG in the last 60 days, right? FANG announced hundreds of thousands in layoffs, and they've been the highest rising stocks of the first quarter. Meta's up 70%, Tesla's up 60%. So if EA was making a play to Wall Street, they got exactly what they wanted, right? They gave all the stock value back that they lost when they announced stepping out of mobile. So if they were making a market cap play, they've succeeded. I would argue if they are in fact going to focus on fewer, bigger, better, they're also going to succeed. Activision got a big hard time from the gaming community when they decided to make that decision about a decade ago, and I was there, and they became exceedingly profitable and continue to set the bar for the highest valuation, in a gaming transaction. So, it's a moment that reflects the times, but it feels like the right decision.
Yeah, first thing that I don't know, I've just observed and that you've also mentioned is that, most of the time when these big tech firms or when gaming companies are announcing layoffs, we can basically see the stock go up. And I'm like, this is such a weird thing from a, human perspective or from any perspective in general to see, basically people are left without a job, and now we're kind of celebrating this happening through the stock going up. But to my other point, it feels expected given the current macroeconomic situation, but it's also a little bit weird because on the one hand, EA has already laid off some people a few months ago, and they've, it's not like they're in a tough financial position necessarily. Like a few months ago, I think towards the end of January, they've delayed their upcoming Star Wars game, which will very likely be a hit from all perspectives. And some people may argue that they've done this precisely to kind of prop up their next round of earnings. So it's very much expected that the next round of earnings for EA will look very good, partly as a result of the layoffs, partly as a result of the new Star Wars game coming out. So, doesn't make a whole lot of sense to me.
I mean, it kind of does to me. I mean, I think we're going through an era where companies are trying to be fiscally fit. And, they put a spin on it. I don't think anybody is necessarily celebrating the layoffs. I think the stock going up is more just the math of, what's in models and what it means for profits and things like that. Not really celebration. But I think, Jonathan, you kind of said it right where you said, well, haven't they been kind of doing this already? And I think that's largely true. And so I have a feeling most of the public rationale is mainly spin. But the one piece of it that felt kind of new to me was I think they said they'll be focused on a handful of strategic priorities going forward, building games with large communities, making the most of those communities with social and creator tools. And I feel like that creator tool piece of things is actually quite new and actually might be telling of where they aim to take their major franchises going forward. As we saw with Activision Blizzard, what that has meant different things for different franchises, but really probably the largest driver of that business has been Call of Duty, less from like a creator standpoint and more from, well, we'll just bring it to mobile, we'll make it free to play, and we'll just build this massive ecosystem around it to get juice as much engagement as possible from this mega IP. And EA doesn't really have a Call of Duty per se. it has other really strong IPs that I'm sure they could take in more directions. But if they really want to turbocharge engagement further, then it kind of makes sense to unleash the community upon it in new ways. And we're already seeing this maybe a bit with The Sims. It was announced a few months ago that for Sims 5, EA is partnering with Overwolf to essentially integrate UGC capabilities into the game, which makes a ton of sense for that franchise to be able to level it up in that kind of way. But maybe we could see it elsewhere. I mean, it could make sense in like other big franchises like A Need for Speed to help take it to the next level. Several other places too. So I think that part to me was kind of like the one interesting bit that stood out from the announcement that might be telling. I don't know. Also, I mean, I think all the mobile shenanigans play into this as well in terms of just how they're resetting, and they have been over the past few months. And I can't fully blame them for that when they look at how the unit economics of mobile have just changed in the industry. But yeah, it is more of the same, but also perhaps a little bit telling of how they're thinking differently about the future.
First, bonus points for using the term shenanigans, one of my favorites. And also, while certainly nobody wants to celebrate the loss of jobs, it's interesting because there is a school of thought circulating Silicon Valley right now that is all of these large tech and gaming companies grossly overhired, during the pandemic era. And, I think Professor Galloway even referred to this as like basically white collar UBI, right? Like six-figure UBI based on like, a decade of zero interest rates. And even post layoffs, you're looking at headcounts significantly higher than 2019. So, there may have been an irrational exuberance in all this hiring over the last few years, fueled by zero interest rates. And all these companies, I believe today, from Amazon to EA, et cetera, are all net double-digit headcount versus 2019.
Yeah. And the other thing with EA too is just that, I mean, the focus on like the bigger IPs, I can see sort of making sense because where they haven't done that recently, it hasn't worked. Mobile being probably the largest example through their acquisitions, even. So yeah, I could see them wanting to just reflect over the past handful of years, be like, well, we probably did overhire. We probably have people in areas where the economics are not as strong as what our core business has been. And we're actually seeing our strongest performance from what is our biggest IP already. So let's lean into that further, unlock what we can, and move forward. I think that makes a lot of sense from like a managing risk perspective and doubling down on what works. Part of me still is a bit worried about when you do that, you also make yourself more susceptible to like innovation around the edges in the industry, and it makes it a bit harder to potentially catch up. I mean, that did happen to them with mobile, and when they tried to catch up, it didn't work. So I would be a bit concerned about the industry growing past these big companies in some ways when they do that. But I think these big IPs like FIFA have legs. So I think EA is still pretty well positioned for the next 3 to 5 plus years, if I had to guess.
Yeah, I thought the last point, I thought that the relationship with Overwolf is quite interesting to see how that's going to play out, because a few days ago was at Ark Survival announced the partnership with Overwolf to do cross-platform modding so that you can do mods on PC and then you can see that and engage with it on console, which has always been a barrier in terms of creation and monetizing, that you have this whole audience that you can't access. So I'm very interested to see how EA will take advantage of that to create the creator economy. And on this has nothing to do with creator economy. I have stage fright because Devin has such great transitions, and I had a blank. Yeah. So yeah, we'll move on to the next topic, which is Diablo 4. Yeah, Mihai, how's the beta going?
Yeah. So the open beta for Diablo 4 went pretty well, actually, or some may argue incredibly well. So basically, Diablo 4 was playable for 2 extended weekends. And during the first weekend, it was only playable by those who purchased some premium version of the game. In the second weekend, it was playable it was available to everyone for free for around 4 days. And it has been reported that across these 2 weekends, players have played for a total of 62 million hours, a combined of 62 million hours, which is essentially the equivalent of 7,000 years of playtime. So, that's quite a number. And yeah, the feedback generally has been very positive.
Yeah, I have opinions. To me, it's just Diablo. Like, it's just, Diablo is Diablo. It's going to sell really freaking well. And in large part, the game is pretty unchanged. Like, if you played last Diablo, it'll feel really similar. It's just a slightly prettier in a creepy way, world where, Diablo things happen. So I actually, and that'll perform really well. I think from my point of view, like from having watched a ton of other people play this game, because when I looked at the beta, the server kept on crashing on me. That it feels, what's the way to put it? I think the formula isn't necessarily stale, but from what I've watched, it maybe could use some innovation at this point. Like, I wish they were pushing the envelope a bit better. The production quality is great. The combat system is typical Diablo, but the level scaling seems like that could get stale. Like, as the same generally recurring monsters scale with you as you level up, the skill tree seems maybe to not have a ton of variety or really feel like it makes that huge of a difference. From what I've read, it feels maybe a bit more like an MMO than an ARPG in some ways, which maybe is a bit different from what, the biggest fans of the franchise really want. So yeah, I mean, it's going to sell like crazy. I think I just wish they would push the envelope a bit more. Other ARPGs like Path of Exile or even Lost Ark have innovated in this space, and Diablo doesn't necessarily need to change things up as much as other players in the space have. But seeing more signs of thoughtful evolution, I think, would have been nice. And it's not to say it's game over. They still could produce more updates through patches or through DLCs or things like that. But yeah, it doesn't really matter what I think, because it'll sell really well anyways. But I'm curious what you think, Jonathan, from having worked in the belly of the Activision Blizzard beast. Is Diablo ever going to change, or is Diablo just always going to be Diablo as we've forever known it?
Well, first, I really worked in the Activision beast, so I'm far from an expert in the Blizzard beast. But I will say this. What Activision learned in a lot of their core IP, and what we seem to have discovered, is gamers are a surprisingly conservative lot. And what I mean by that is, like, they don't actually want that much change. The parallel I can make to that from the part of the belly of the beast I lived in, God, the backlash when we put Call of Duty in space, right? Like the huge, massive backlash. So I think you really hit the key word with like evolution. Like, Diablo should evolve slowly. And I think you raised some excellent places where it could. But these giant multi-billion-dollar franchises do not seem to be rewarded for step stage evolution. In fact, they seem to be punished for that. Right. And every time somebody writes off one of these major franchises for being stale or being old, Candy Crush went on to continue to make billions a year. COD went on to now be bigger than it ever was before after concerns that it wasn't evolving. And so Activision, especially sort of facing a major monetization event, probably made a very smart decision to evolve a teeny bit and deliver the fans what they wanted. Right. And again, it's like, how much does like a Marvel franchise movie like evolve? So careful evolution is probably the prudent, I hate to sound like a CFO on these, on these Zooms, but, it's like the CFO's view of evolution is probably what's going to reward these multi-billion-dollar IP, for better or for worse, or for better and for worse.
I'm absolutely aligned with you, Jonathan. Even with Marvel, Marvel is trying to evolve now with their movies and series, and that's gaining massive backlash. Even just trying to create some diversity in their character set. So I don't think there is financial incentive to try to evolve just to evolve. You have a market, it's known, it's predictable. you know how to satisfy your players. They're going to buy the next Diablo and continue spending with this live ops formula that they've perfected with Diablo Immortal. Yeah. If I were in Blizzard's shoes, I wouldn't try to mix the formula too much if it's working.
That's fair. I mean, you're right. I think I just don't see the evolution at all, really, other than just kind of the looks. And so I feel like there still could be a little bit more done to even just future proof the series for like another decade or something in a market that is more competitive than it used to be. So I totally understand the CFO point of view, as you put it. And I think it's largely wise. And I don't think it needs crazy changes, but I still think it could be a bit better than it is. But again, my opinion doesn't matter because it's going to sell like crazy. So let's move on.
Okay, Jonathan. So why did E3 get canceled?
So, big story of the week, right? E3 canceled. Potentially a surprise, potentially not a surprise, right? Like, it sort of feels like what we're trying to unpack here is, had enough publishers made the decision on their own to leave, where there wasn't enough great weight, gravitas, and revenue to keep E3 alive for 2023? Or was the process under new management and under Repop broken enough that contributed to publishers choosing not to participate, right? Like, we know E3 has had a very rocky history of huge highs and huge lows, and going away even before the pandemic and coming back and being reborn. And it's in a little venue in Santa Monica. And I used to build $5 million booths for it. You know, it's lived in all iterations, but I don't believe you can blame the industry per se. Like, it feels like, without being completely behind the curtain this year, mistakes must have been made, right? Like, gamers were all over CES. Gamers were all over, South by Southwest. I had just come back from GDC that was crazy, busy, felt like pre-pandemic times. Now, certainly, those shows don't require, for the most part, multi-million-dollar activations on the part of each publisher, right? They can be activated in smaller scale, more intimate ways, which potentially is part of the problem. But Gamescom was back on last year. Like, it feels like there's an underlying strategic and management problem that in some ways has been foisted off on publisher participation.
I agree. I think Repop probably dropped the ball in a few ways. Probably is largely execution and not really picking up the pieces after COVID too well. But also, I mean, I think the reality of the market has changed quite a bit too, where it's just so much easier for publishers to go direct to consumer. And so, and all of the, at least the big three, like console companies, do a pretty good job of that. And, Jeff Keighley, he's done a nice job too, swooping in with Summer Game Fest. And he has very high participation from all the big players there too, which is really impressive. I mean, he executed well. So yeah, I have a hard time seeing exactly how E3 is really going to ever come back to at least what it was. I don't know if it'll come back in general. I kind of hope so. I've never been to E3. I would love to go to E3, even if it's the last one and it's not great, just to say that I've been. But yeah, I'm really curious to see where this goes next, because the market doesn't need it the same way. But at the same time, I think fans would enjoy what it used to be again.
I'm going to question whether the market doesn't need it, right? Because you make a great point, which is gaming as a category has a large enough scale and enough cultural gravitas that they can create their own marketing beats, right? And that's proven. An analog I kind of like to compare this to is the auto shows, which have kind of gone through the same thing. And you're like, why the auto shows? So the auto shows is like the manufacturers used to activate multi-million-dollar booths, great expense at like LA Auto Show, New York Auto Show, Detroit Auto Show. And what you started to see was brands activating outside of the auto show, but they still used the beat or the blast radius of the auto show to tell the story. And even to your point about like the direct to gamer activations, Microsoft, Sony, Nintendo used to put on their own events, but during the E3 period, right? Or I was at Activision of the Year where we put on the concert for Guitar Hero at the Staples Center, but during the E3 period. So yes, these gaming companies can pivot to around CES, around South by Southwest, they're just competing with a different kind of noise, right? But they're still competing with noise. I do think there's a role for them. And here's my I have two crazy ideas of how it can come back. One is have a media company buy E3, and the combination of the media activations around gaming, like a gaming media company like IGN, or even have Jeff Keighley buy, E3 and come back could work. The second one is double down on where the heat is, right? Like, how about E3 2024 is in MENA? It's in the heart of like Saudi Arabia or Qatar, like regions that have like said, I'm spending $12 billion in this space. And then when that is successful, bring it back to LA, right? That's sort of reborn it. So if you made me the CEO of E3 tomorrow, I'm shooting for like Saudi Arabia 2024 and then back in LA 2025.
On this point, if E3 were to be held in, I don't know, in Saudi Arabia, do you think, it would receive backlash from the wider gaming community, given, the region's history?
It could. I mean, they're very different markets, right? I stole that strategy a little bit from the watch industry, who came back immediately post-COVID to do kind of like major luxury watch events in that region of the world because they remain the largest buyers. Now, that may be a very different market that didn't get the same backlash, and there could be backlash, so that could be an issue, but, remains to be seen. All I will say is, like, look at the energy around the World Cup, right? Like, I'm not going to delve into the politics of anything, but like everybody who wanted to raise money, was trying to raise money, was there in Qatar.
What do you think is most likely to happen?
Most likely to happen?
Yeah.
I think most likely to happen, they give it one more try in 2024 under better management, and that in Los Angeles, and that defines the state of the franchise.
Okay. I'm curious. Do you think that'll work, though, if they give it one last shot? Do you think it'll stick?
I may be the rare believer in IRL events this year, but, I made an effort to go to CES. I made an effort to go to DICE. I made an effort to go to GDC. And it felt like, for no other reason than people wanted and needed to see people again, there is a marketplace demand for industry-specific gathering spaces, IRL. Now, does that mean that companies have the stomach in this economic climate to build $5 million booths again? I don't know. But I do feel like business wants to go back to doing business face-to-face.
I think the thing I miss more about E3 is having the in real life fever dream together of experiencing something all at once and just taking in the energy that it creates with awesome reveals. And personally, I believe that these events sort of need to evolve with the globalization of gaming, and not everyone can buy this really expensive ticket to travel to another country and accommodation. And we're starting to see these with, for example, conferences like the GDC. It's just so expensive. It locks a massive amount of the market of the game developers, not just talk about the consumers, of being able to attend these. And so it's very expensive for companies to attend E3, and it's also very expensive for the players to attend E3. And then I miss, when I'm watching the game announcements just through a stream, I really miss being with my friends and being with strangers and just awing, like, oh, gasp, what is this awesome new game? And you just enter into this fever community experience. And so I really hope we're moving towards a place where there are more localized, simultaneous or across time zones, like just localized activations where you can go with other people in real life, and it is accessible to experience these reveals all together. Because I don't think that's a gap that digital will plug for now.
That's so bang on. And I'll tell you, that's what it felt like in the room at the Game Awards this year, right? Like, that's a little bit of less of a participatory and lights down experience, but it felt like a room full of people in Los Angeles celebrating their shared love for gaming. And I think people deeply want that.
Well, I think we'll move on then to the next topic about the market stabilizing. Less of a fever dream, hopefully not a fever dream. Aaron, what's going on?
Sure. So last week, Data.ai, which is Naavik's mobile data partner, published two reports. Its Q1 Gaming Index and its State of Mobile Gaming 2023 report. They're interesting from a high level, so go check them out. But there is a quote from the VentureBeat article that covers the report that I wanted to call out and get some opinions on. It says Data.ai suggests that mobile gaming's new normal is a much higher plateau than it was in the pre-pandemic years. The Q1 index predicts that gamers will spend more than $1.6 billion a week on games in the first quarter of this year. That's about a 28% increase on spending from pre-pandemic levels, which is around Q1 2020. They're also downloading games at a rate of 1.2 billion titles per week globally. The numbers aren't as high as they were in the peak pandemic periods, such as Q1 2021 or 2022, but they are above where they were at the beginning of the worldwide shutdowns. So if you look at the chart that's in the article of consumer spend in games for Q1, unsurprisingly, from 2020 to 2021, it blasted up. From 2021 to 2022, it fell a bit. And from 2022 to 2023, it's essentially flat. So, if you just kind of step back and look at how they were portraying the numbers, while it's true that from 2020 to 2023, Q1 spending is up 28%, which is about 8.5% annualized. That 8.5% annualized doesn't really exist because it's sort of been all over the place. And extrapolating any kind of line of best fit is pretty misleading because of the impacts of ATT specifically are probably going to keep the market flat-ish for a while. So anyways, I don't know how long we really need to spend on this topic because we talked about mobile quite a bit. But I'm curious what you think about how the best way to frame up this so-called new normal is these days, or even if it makes sense to call it a new normal. It feels wrong, like in my opinion, to frame it as like a pre versus post pandemic new normal versus more of like a pre versus post ATT, for example. But I'm just curious, like when you look at these numbers, how they're portrayed and how you just kind of view this market going forward, what do you think about a new normal or not in mobile gaming?
I agree with you that it's hard to pull apart the pandemic and the post-IDFA effects. I think we are seeing still an effect of the market on Google Play with Android. So it's not just IDFA and privacy changes. I will not be celebrating the market stabilization yet. 1 quarter can be coincidence. 2 quarters, maybe there's a trend. 3 quarters, then I'll make my own conclusions. And I also don't want to celebrate return to growth too early because we will have the Google Privacy Sandbox changes coming at some point, maybe end of 2024, beginning of 25. We're not sure yet. And so the mindset that I'm in at the moment is we really need to learn how to go back to growth and increasing financial performance, and we're launching new games and scaling new games in this post-IDFA landscape so that when the Google privacy changes roll in, we won't see the downward trend that we saw in all these effects because we can take the learnings ahead.
Yeah, that's fair. I think from my point of view, maybe I just quibble with the framing of some of this. Like it feels a bit disingenuous to to like cherry pick 2020 through 2023 and be like, look, the plateau is at a higher level than it used to be. When in reality, maybe the better framing is like, oh crap, it's a plateau versus like, it used to actually be a line that went up. And yeah, I mean, you're right, Maria. I think the industry needs to figure out how to launch and scale when UA is harder, or just figure out those new techniques. And I don't think we need to spend too much time in that.
Yeah.
But anyways, that was interesting.
A message of hope. I think when I first started working in the mobile games industry and there were just clear incumbents in the top charts, I entered the industry thinking, how will I ever topple them? Is it even possible for a small company to grow and reach a scale of the companies that arrived early in the growth of the mobile gaming space? But now with these changes of the landscape, I'm kind of enthusiastic of, okay, wait, as a small company, if you can kind of figure out how to use this to your advantage, we can perhaps see just a mix up of these top charts and seeing new games and new companies and a shift in general in the market. So that's what excites me and what keeps me hopeful for the next few years of mobile gaming. Well, let's talk about games. Mihai, yeah, Sky Mavis announced some games.
Indeed. So Sky Mavis, the creator of blockchain game Axie Infinity, has announced it is partnering with 4 different game studios as part of their builders program. So they're essentially making some equity grants into these studios, and they will build together some games that will be exclusive to the Ronin network. But before talking about the individual studios, I think it's useful to just do a brief recap of Sky Mavis and what's been going on in the last few years on their end. So obviously they've released Axie Infinity, which was, kind of the poster child of blockchain games, has seen over 4 billion USD in trading activity on its marketplace. Was later hacked for 625 million. In the meantime, Sky Mavis has raised some money and made the users whole. Also addressed some of the security concerns by shifting Ronin from proof of authority to delegated proof of stake, which, as I said, is likely to alleviate some of these concerns, but not eliminate them entirely. Because there's still a bridge between Ronin and Ethereum, and bridges generally introduce new attack vectors or make the possibility of an attack or a hack quite a bit higher. But today, Sky Mavis is focused on building 3 core pillars, so to speak. So on the one hand, they are building games. So they've released Axie Infinity, which is the OG blockchain game. They've released Axie Origins, which is kind of a free-to-play game that's meant to draw people into the Axie ecosystem and draw them towards the main game. They've released some land gameplay, right? Users could acquire land, and now there is some gameplay around that. There is a separate game. So this is the first pillar. The second pillar is kind of the gaming adjacent tools. So they have a proprietary wallet, which users can leverage. They have a proprietary marketplace, which both the Axie games and the games that they are partnering with will be able to leverage. And they also have something called the Mavis Hub, which is kind of a digital storefront. So similar in a way to Steam and to the Epic Game Store. But there's something that doesn't really make sense here to me, because they have this Mavis Hub that you can download on your PC. But Sky Mavis has stated repeatedly that their core focus is on mobile. So I'm not sure how these 2 things will work together, if they will, in the future. And there's one more thing here, that since, their games are, although they're available on mobile, they're not available on any of the 2 main stores. So they're not available on the Google Play Store or the iOS Store, which is obviously a huge distribution problem, because that's how you get people to play them. You need to make these games available. But because of the fact that they contain NFTs and regulatory uncertainty, they are not yet available. And now the third pillar is the kind of the blockchain infrastructure tools pillar. They have the blockchain, obviously, the decentralized exchange Katana, which players can use to swap tokens and stuff like that. So this is kind of a short description of where Sky Mavis is now. And now onto the 4 studios that they've partnered with. So I'm not sure if I should go through all 4 of them, or if I should just describe do a one-liner of what their main specialty is.
Yeah, one-liner sounds good. Yeah.
Nope. All right. So the first one is called Directive Games. It was founded in 2014. Developed some relatively unknown VR AR games, and now it is partnered with Sky Mavis. The second one is Tribe Studio. It's in essence they're planning to develop a social MMO on the blockchain, like pretty much a lot of other studios. Building MMOs on the blockchain or in general seems to be a very popular strategy because they can essentially be, a successful MMO is poised to be a cash cow for many years to come. But this doesn't mean that it's an easy task. MMOs are some of the most complex games to develop, all the more so if they're on the blockchain, because you need to build a whole economy around them. The third studio is called Bali Games. It's founded by some people who built the popular Anipang series in South Korea. And the fourth studio is called Baud.io, and they're basically building a cricket game for the Indian mobile market.
Very different from one another.
Yeah, I think that's part of their strategy. I think they're kind of trying to appeal to different audiences, right? So they're trying to appeal to the mobile gaming audience in India. They're trying to appeal to the mobile gaming audience in South Korea and in that part of the world. And they're also trying to appeal to, to Western audiences with the first two games. But yeah, I think the main question is: do you think these studios will release good games that will be played by a considerable number of people? Because my concern here is that there's nothing that to me indicates this will be the case.
Yeah, I think that's right. Let me share my point of view and maybe just zoomed out a little bit, then I'll zoom back into the game. So I've always admired Sky Mavis's ambition, and as a flag bearer of this new movement, amassing a ton of users and funding, and then trying to turn that into a much larger ecosystem. And I think that's exciting. And all this news, it's great to see them still in the game. But I think they shifted from being a first mover to being much more of an underdog now in the world of Web3 because of obviously Axie Infinity blowing up. It wasn't a sustainable economy. And two, the Ronin hack really set back those ambitions to onboard other teams and developers onto its platform. And with those two things being really compressed, the other parts of the ecosystem, can't really gain traction either, since they all work together. So the company has been largely quiet for a while as they've just been building to kind of fix Ronin, to now have this major upgrade to delegated proof of stake, which is exciting. But now the question is, are these games going to move the needle enough, not just for the games themselves, but for the ecosystem as a whole? And I think it's interesting to look at these games from the standpoint of they're very curated. Sky Mavis before had a creator program which empowered people who were essentially fans to make small games. But I think when we talked about this a year ago or whatever that was, we were pretty skeptical because the quality of the games didn't look awesome. The creator revenues, the revenue share terms didn't look that competitive, and it just had weird quirks like forcing users to adopt the AXS token across their games, which just made it more limiting. And I don't think that program has worked out super well, but maybe it was a stepping stone to what this became, which actually has professional teams. But another couple of observations I had about this move is that at least 2 of these 4 games, from what I could tell, will not have Web3 features out of the gate, which shows a pretty major transition from being very much play to earn first to now gameplay first, to then build a better game, build an audience, to then start to integrate Web3 features, probably in more subtle ways. And then third, one of these games is using the Axie Infinity IP for a match 3 game. I don't fully understand that the match 3 component and how that'll work with Mavis Hub and stuff like that. And it's just a super competitive market anyways. But whatever, it still shows that they're trying to think of more utility for the core IP. And I think Axie Infinity has 200,000 DAUs, so it's obviously tiny in comparison to other mainstream games. But still is an asset, and really their community is their largest advantage right now. And then lastly, one of the games is cricket, which shows that they're focusing on the India market, which obviously is huge, and from what I could tell is much more receptive, less critical of Web3 gaming as a whole, and that would be a very new direction for Sky Mavis too. So it still is a bit scattershot in the approach here, and I'm not sure how much it will really work or scale, but it is a very positive development. So props to the team for getting to this point. The hard part for me to understand, or just like really want to be super bullish on this, is while Sky Mavis was pretty quiet in building all of this up, we saw Polygon and Immutable in particular just turbocharge forward, have pretty tremendous BD, and be able to onboard a ton of external partners onto their tech and their platforms. And so I think it's going to be really hard for Sky Mavis to kind of compete against those two companies, especially now that they're partnering together in more ways. And maybe they'll have some tricks up their sleeve or much more announcements to come. But I think shifting from a first mover to now being the underdog is a tough position to be in. And while this is a positive development, it's not nearly enough to compete more ecosystem wide over the next few years, at least.
It's interesting because from where I sit, Axie Infinity was a financial schema before it was a game, and then it blew up. And I don't think there was actually any real gaming there. And you raised a great point where now these are Web 2 games, not Web 3 games. And so really there's a disconnect between Axie Infinity's first audience and first position and now the current position. And what I can't tell is it a major walk back to try to actually be a gaming company? Or is it just simply a disconnect, right, from who their audience was and what their audience seeks versus what they're making now? You raise a great point about Polygon and Immutable, and they have incredible BD, but I would also characterize that as checkbook BD, right? Which is a lot of checks were written to a lot of partners to get them on the platform, which is a little different than belief in the platform. And I believe even in this news that checks were written to these developers. So I think we have to find in this Web3 gaming world, games that are built with an audience in mind, and developers are in place because they're believers instead of check recipients, right? It was very easy to go raise money in this world to build games by aligning yourself with a major platform. And that's very different than the way traditional gaming ecosystems have been built. And as all these funds become depleted, what happens to the whole space, right? As people are making decisions without big advanced checks, where does it all go?
Yeah, I don't know. Probably to where the network effects are, where the most players and the most other developers are. And when that works, that also, turbocharges both fundraising and just revenue for those other companies to get advantages and reinvesting in R&D at rates that the other platforms can't really match, as sort of where I would guess. But to kind of your earlier point, I do think there has been a disconnect between what players initially expected and what they do now. And before the expectation, the job to be done was to earn money from playing games, which is what the entire Web3 gaming bubble, was driven by. And I do think that, many teams, at Sky Mavis most of all, they were coming from the right place. Their heart was in a place of helping people unlock economic prosperity. It just didn't work. And so now, with a much smaller audience, because many people went away because they couldn't make money anymore, the job to be done has shifted from less earning, although that still might be a component, to more just asset ownership and just being excited to be part of a community. And I think their community is their largest asset, but obviously it's not at a scale that similar to other franchises, so it only has more minimal impact and how it can drive a full ecosystem from this point. But I do think the job to be done of more ownership and leveraging assets across games and joining the community, having fun with the community is more of the driver, which is a very much a disconnect. And I'm not 100% sure if that's strong enough to really push things forward in a super competitive way. It'll take more than that.
You raised the point about community twice, which I think is really important. I was out in the marketplace raising money for something with Axie Infinity as a comp in the deck, and there was a huge amount of VC blowback, right? Like, we actually ended up taking it out of the deck as a comp. Like, it's become that much of a negative in the money raising space. And it's also interesting because that community has been held up as like one of the larger scale, in Web3 and kind of like a target mark. And you raised earlier in this conversation, relative to the community scale of traditional gaming, it's actually quite teeny, right? That if you live in this bubble, it's quite big. But if you step into a larger gaming ecosystem, the scale really isn't there. So
I think the way that I'm processing Sky Mavis, and I won't be arrogant enough to say that they should have done this in a different way. They were in a very nascent market. It was so hard to know what the right decisions were made. I'm sure they made the best decisions with the information that they had at hand. But I see almost three big moments where that has led to them to their current standpoint. I think one, they started building a game and it looked cute. They had a community, but it ended losing fuel because they shifted their attention to trying to build being a platform. I think Aaron used the term being just scattered. And so instead of like doubling down on something where you already had a community, where you already had a foundation, and really focus on trying to build that and make it sustainable and grow it, they decided to try to build out being a platform. But then they went quiet. And in a nascent market where you have so many companies trying to enter blockchain, and so many of them have no idea who to work with, you'll probably go to the person that talks the most because they have the most presence. You feel that they're more trustworthy. And I think you had a really great point with Immutable and Polygon. They're the first people to think about if you're ever, I want to make a blockchain game. Okay, I'm going to go and speak with them. Like, who's Ronin really in this market apart from the checkbook? And then, by being quiet, they just lost their market share. And they also lost their identity. And I think that's the third point. I just don't know who Sky Mavis is. Do they make games? Are they a platform? Are they a publisher? I just don't understand what their dream and what their value proposition is at the moment for the market. And so I really hope that they can find that. And unfortunately, looking at all the different kind of games, like a VR, AR company, and then an MMO is just, again, it's like a scattered proposition of what games players can find on this blockchain. It's not even targeting like one community, it's targeting so many other different communities. So how are you going to leverage your existing community? All right, I don't know if it's a bit of a rant. I hope this makes sense. I'm hoping to see the consolidated vision of Sky Mavis, really.
Yeah,
it makes total sense in this time where everybody has the attention span of a gnat. If you don't understand who somebody is basically instantly, you're in deep trouble. And that's really the powerful point in your point about their identity issues.
Yeah. The very last thing I'll say on this is just to put a plug for an interview that Nico on our team for this podcast did with Kathleen. I'm blanking on her last name, but she's like the head of BD for Ronin. And I've heard really good things about the interview. I haven't listened to it yet, but it just came out a few days ago at the point that this episode will come out. So I'm sure that'll put much more context around this conversation, answer many of the questions that we have. And if you're interested in this conversation, I'm sure that one will be super interesting too.
I'll go and listen to it. I should have listened to be prepared with my thoughts.
I know.
So I think we'll wrap up here. We're a little bit over time. Mihai, thanks for joining for your first episode. Jonathan, Aaron, it's always nice to have you here. And it was lovely to host you for this week, and we'll see you in the next week. Bye, everyone.
If you enjoyed today's episode, whether on YouTube or your favorite podcast app, make sure to like, subscribe, comment, or give a 5-star review. And if you want to reach out or provide feedback, shoot us a note at podcast@naavik.co or find us on Twitter and LinkedIn. Plus, if you want to learn more about what Naavik has to offer, make sure to check out our website, www.naavik.co. There, you can sign up for the #1 games industry newsletter, Naavik Digest, level up your insights with our premium research platform, Naavik Pro, or contact us to learn about our wide-ranging consulting and advisory services. Again, that is www.naavik.co. Thanks for listening, and we'll catch you in the next episode.